fresh 6.5-year low earlier. $40.13 a barrel was the low. 40.18 right now, down a buck. Come on in, market watcher Adam Sarhan. Adam, how low is this stock market gonna go?
You know, last week, Stuart, on your show, I said 2040 was an important line in the sand for the S&P 500. It broke below there and it closed below there yesterday. For all intents and purposes, this is a textbook example of what a big market top looks like. I also said on the show that every bull market has a definitive beginning and an end. And what we're seeing now, notwithstanding more easy money from the Fed or some other external bullish event, is a classic topping pattern in the market.
So what I'm hearing, and I'm reading between the lines, is that we're going down from here.
At this stage of the game, until the S&P closes above 2040, the path of least resistance is lower.
Okay. Now, how far down? I want you to make a forecast for us, okay? That's what our viewers want.
Sure.
They want a number.
Absolutely.
And they want a number on the Dow Jones Industrial Average. 16.8, 16.7 now. How far down?
The first psychologically important level that I would like to highlight would be a 10% correction. Typically, a pullback is considered 0 to 10% from a high. A correction is 10 to 19%, and then a bear market is 20 or more. Right now, the Russell 2000 is 10% below its recent high hit a few months ago. So the Dow and the S&P and the NASDAQ, for that matter, the next level down would be that 10% threshold, which would have the main media calling a correction across the board for the major indices.
So, again, I'm reading between the line. 15,000 for the Dow Industrials, a 15 handle, put it like that. You see that?
Unless we start going back up. But yes, there's no problem. You easily can get a 10% correction because we haven't had a 10% correction in over 3 years because of all the easy money from the Fed. The final point is that finally we're starting to see now in Europe, a lot of their stock markets are falling in correction territory with the ECB or the European Central Bank printing money. So that means you have that law of diminishing returns kicks in. Eventually the market is going to stop reacting so well to easy money from the Fed and other central banks, and we're seeing that right now in Europe.
We hear you. Adam, thank you very much for joining us. Appreciate it. And we're down 243.